How's it going, traders? Welcome back to my screen. Today I'll be talking about Euro USD. Someone asked me to actually look at the pair, and I'll be talking about Euro USD. Sorry if you didn't get my name. My name is Bestman Deperekelsiamakri. I'm a fund manager and managing significant amount of money for wealthy and dangerous people. And I'm also a swing trader. I love trading. Euro USD chart. Here we go. So I'm going to start from I'm going to look at the market from two perspectives. I don't know what kind of trader you are. Although I'm a swing trader, I like looking at the market from a higher perspective because it gives me a better eye view of the overall market compared to the lower time frame. But because I don't know what kind of trader you are, I'm going to look at the market from an intraday perspective. Then at the end part of the video, I'm going to look at the market from a clear overview. All right, so you get to choose what you want to trade and how you're going to trade it. All right, so let's break this pair down. Euro USD chart, from an intraday perspective, the market is bullish. Okay, it is bullish because it shakes all the characteristic of an uptrend, but we pretty much has run into a major area of resistance, which is this area right here. And we are having issues pushing out from this area. So we had a break of this area, a fake out, but we couldn't sustain. Immediately we broke below this area. We came in for a retest below this area. We are currently pointing down. All right, so we're currently pointing down to do a retest of this area before actually blowing all the way back up. I think at again we've run into a major area of resistance. We faked out. We couldn't sustain. We break below. We did a retest of here. We're currently pointing down. Now, this is not the time for you to start looking for buying position. Allow the market to pull back into this demand level. Once price pull back into this demand level, you can start looking for bullish candlestick bounce. Maybe a bullish engulfing candle, a pin, from the 4 hours time frame, at least the 1 hour time frame, but I'll prefer the 4 hours time frame. Wait for a bullish candlestick bounce, at least from the 4 hours time frame. Why not the 15 minutes or the 5 minutes or the 1 minute time frame or the 30 minutes time frame? Those time frames are not concrete enough. The decisions made on those time frame are not concrete enough. You can see a bullish engulfing candle bounce here from a 15 minutes. And it's also possible I can just break below and start going down. But best believe you see a bullish engulfing candle bounce from the 4 hours, the chances of price pushing all the way back up is very likely compared to a 5 minutes or 1 minute. So wait for price to at least come into this level, wait for a bullish engulfing candle bounce. A push to the upside will be very eminent. Why am I anticipating price to pull back into this demand level before actually breaking to the upside? One, the time frame is bearish, and as you can see, I've drawn my counter trend line. This trend line is kind of in confluence with this demand level. So we have confluence, and we have demand level coming in confluence with the trend line. And if I bring up my Fibonacci retracement tool, you realize we run in this area kind of align with the 50% Fibonacci retracement level. So we have demand level, we have trend line support, we have Fibonacci support, giving us an optimal reason that if price comes in here and we see a bullish engulfing candle bounce, a continuation to the upside, it will be very eminent. Now, for me, I'll prefer if we bounce here. For me, I'm more of a breakout, a pullback, then price coming back to bounce from that area, then coming to take out my counter trend line. So if price come back and take out this counter trend line drew here, so if you come here, you see a bullish breakout from this counter trend line, you can start buying. Okay, once price comes into this level, lock in all your position or close out all your position entirely as profit. Your stop loss can come somewhere around this area. So this is like 1:4, 1:3. Top loss can come somewhere around this area. But once price comes in here, please close in all your position entirely as profit. Why? This is a major area of resistance. Price can come here, reverse, and start pulling all the way to the downside. The worst thing that can happen to you as a trader is to be in a lot of profit only for price to come into a major area of concern and reverse, and your profit now turns to negative. Best believe is the most painful feeling in the world. If you're not well skilled in terms of controlling your emotion, that once losing trade can now open a portal of series of losing trade. You don't want that to happen. So once we bounce here, we take out this counter trend line, we come in here. Please close in all of your position entirely as profit. Like I said earlier, I see no reason as to why we shouldn't continue all the way to the upside. From an intraday perspective, a bounce from here, a break of our counter line, a push to the upside is very evident. Now that's it for if you're an intraday trader. But for me, I'm a swing trader. I manage large funds for wealthy and dangerous investors. The last thing I want to be doing is to be playing with somebody's fortune. All right, so I'm going to look at the market from a big picture perspective. If you look at it from a big picture perspective, you will realize that this immediate trend, this is an immediate bullish trend, has run into a major area of resistance, which is this trend line resistance somewhere around there, and we are having issues breaking above this area. This trend line has been the catalyst, has been the bad boy, the wayward boy, as to why we haven't blown all the way to the upside. So we breached this level. We had a bullish engulfing candle, broke above this level. Immediately we had a bearish engulfing candle. Let me zoom in properly so you can see. Immediately we had a bearish engulfing candle close below this level. So whenever I see price breach an area and immediately I see a bearish engulfing candle close, I'll just come there and put the resistance bar and say to myself, if truly we want to break out and keep going to the upside, price should come back here and take out this level. But what happened is we tried again, we failed, we came back down. But notice that when we are coming down, we stood firm at this level. We came and balanced well at this level. We tried again, we faked out, couldn't sustain. We came back here, we stood firm. So basically the market is trading between this high and this low. The market doesn't know if it wants to go up or if it wants to reverse to continue with the major trend, which is bearish. So we are in a range. The market is moving sideways. I can tell for a fact these are several blown accounts for most traders. These are several failed prop firm challenges for most traders. Most persons' fortunes have been wiped out because of why the average trader is used to trading directional basis. Market is going up, they are buying. Market is coming down, they are selling. Once the market begins moving sideways, the average trader tends to struggle. But I'm not here to talk about people's misfortune and blown accounts. I'm here to talk about how me and you can actually make money from the market. So ideally, if I'm to buy, right now I'm currently out of the Euro USD chart. I've made money from inside of this range. If you watch my YouTube channel, my earlier video, you realize we made money here. I'll wait for price to come out and take out this level. This was the area we tried breaking out before we failed. Tried again, we failed. Tried again, we failed. So the only time I will consider taking the buy is if I see a monthly or a daily or a weekly candle break above this area. Then I can now go to the lower time frame to look out for retest of here. I can start buying all the way into this area. If we want to reverse to the downside, price should come back here and take out this level. It means we've respected this trend line. A continuation to the downside will continue. Even this immediate trend will reverse to continue with the major trend, which is bearish, and our next target will be this area. Our next target of profit will be once we break out from this area. I see a proper bullish bearish a proper bearish engulfing candle breakout here. Best believe we are coming here. If we take out this level, we are coming here. And if I'm looking at this properly, this is looking like a left shoulder. Let me zoom in properly. This is looking like a left shoulder, a head. Maybe we'll play around here a little bit to form a right shoulder. Either should happen. This becomes the neckline. If you break out from here, we'll do a retest of here. I will start coming down. Head and shoulder pattern are bearish, reverse or sharp pattern. They can reverse a trend from being bullish to now being bearish. That means either head and shoulder pattern forms inside of this area. This immediate bullish trend will reverse to continue with the major time frame, which is bearish. So the deciding factor will be the breakout of here or here. So that's it for Euro USD chart. I hope this helps. Yeah, so I'd love to hear your own response. Once again, my name is Bestman Depreke. Yeah, thank you. I'm catching you in my subsequent videos. Yeah.